everybody. Welcome to another geopolitical analysis video here on the beautiful view that we have looking down the North York region of Toronto. So, let's get into it. Please like, subscribe. It's been some time. We looked into the markets, and I thought today was a beautiful day, especially given the weather, the stupendous warmth of the sun, but also looking at the projection and the risk assets and what's going on in this capitalistic market. It's not normal to be optimistic when the masses are pessimistic. It's not normal. In the thunderous clamour of tariffs, trade wars, the omnipresent fear of recession, right? The negative media and the narratives and the news are there to rattle you. If you have conviction of your trades, then you should not be affected and you should be remain squared and focused, because conviction is not to be wavered that easily. So let's take a look at why I remained a bit cautious but overly optimistic. First things first, we know that Trump wanted a lower value of the dollar in order to export more, right? We know, secondly, that Trump is fighting deficits, trade deficits with everybody. Nobody's excluded from that conversation. And looking at the fall of the dollar, the devaluation of the currency, one would only surmise that the possibility of increasing risk assets, the value of risk assets, for the last hurrah before a recession kicks in, would be now. This week was amazing for Bitcoin, it was amazing for the miners, has been positive for many alternatives out there, especially if you're looking at some of the altcoins. But overall, we're looking at the Russell, okay, which was a very important market to look at because it signifies the small, medium business and their correlation with interest rates as they borrow typically higher yields than most corporations. Now, if we look at the long term, like I've showed you many times before, I was squared on this. Looking at the fear, because this was a fear trade, every time there were tariff talks and a little bit discussion of trade wars, interest rates would spike. Now, when you have a news driven spike, it's not going to last because that means that it is hollow, it doesn't have much depth to continue its rally. And as we've been seeing here, interest rates have been just fluctuating, but way lower than over here, as you can see, back in October 2023. Since 2023, we have not seen this level been touched. So when you see lower highs, lower lows, this indicates 90% of the time that you're going to have lower prices coming in sooner rather than later. The dollar wants to go lower. I believe the dollar wants to go much, much lower. And this consolidation here, we might see a bounce, like I told you some time ago when we did another video, that we may see some bounces, but ultimately we want to see this go lower. And it will go lower. It definitely will go lower. Now, if you're somebody who is afraid of the recession and you want to park some money, US bonds is not a bad idea right now. It's cheap. We've seen a retest, and we've seen that whenever there's a discussion of recession, even stagflation, bonds typically get a bit of a boost. You play with options. This is something that I've been doing. I've been taking advantage. Every time it dips, that's a good idea to add or get your feet into it. Now the miners are the riskiest of the riskies, and This is what I've been saying for a long time. I'm super positive on this. I've been accumulating. You know this. I've been a fan of Marathon. It's the strongest company in the Bitcoin mining space, and this is what I've been doing. Today we had a ridiculous 10-13% jump. And this is what is expected to see. We're expected to see now fast moves, slingshot moves, just like Bitcoin went from a few weeks it was in the 80,000 range, and now it's in the 103,000. We might see a retest lower in the 90K, and then we should launch much higher in the 130 zone, 140. That's my projection. QQQ is not looking bad. Look at the that beautiful bounce that we've had. Um, commodities have been suffering some bounces here and there, but like I told you, it wouldn't be a bad idea to get into commodities slowly. Natural gas had a very interesting move, although I do believe, pardon me, natural gas is meant to go lower, same as oil. And when you look at two indicators, oil and bonds, they send us a very clear message of what is going on in the world. Stagflation is a discussion that the Fed alluded to this week, but in my opinion, stagflation is not going to come, and we're going to see uh, a stronger recession coming in as opposed to stagflation. I do believe that a lot of these trade wars and these tariff wars will sort of dissipate. And yes, we will see less trade between certain countries, but overall, I think logic will prevail and trade will win. Free trade will win. Capitalism eventually wins because the capital flows, money doesn't sleep, it has to move so it doesn't lose its value. That's all I had for you folks, really. I just wanted to show you that although the VIX skyrocketed in the 80 zone from, I mean, the VIXy here. I should find the VIX for you guys. 1 second. So our volatility index jumped, yeah, from 60 down to here, the 16 number. So huge. If anyone took advantage of this, good for you. Amazing, amazing. Gold. I told you that gold topped at 3,500. That's my opinion. And I do think that now is the time for Bitcoin and its proxies. You guys take care, like, subscribe, comment, and I'll see you on another video. Bye for now.